Hello everyone, good morning. This is Pandakwant and today I'm going to explain Marvel, how the earnings were and what is expected next. So Marvel just reported its earnings and then the stock popped out 10% after hours, 2.2 billion in revenue if you can see, and then 42% full year growth. So that's what we're talking about. If we combine every quarter, it's 42% full year growth. And the management kind of guided 11 billion over the next year and 15 billion in financial year 2028 with over $5 earnings per share, which is huge. So these numbers are actually insane, but here's the problem nobody is talking about. We are in the middle of a war and how it's going to impact chips, because a war changes everything, and how you should rate chip stocks right now. Let me break it down for you. All right. Definitely, these numbers are big and deserve respect. Quarter financial year 2026, they had $2.2 billion. And again, the guidance was huge. But here's also the part matters, right? The data center revenue, if you see over here, like how they have been shifting over the data centers. So that was like 1.65 billion in quarter four alone. That's 74% of their total revenue. 3 years ago, if you see, like, their market share was very less, and then even they were like a storage chip company. They were like nobody in the business, but that's how they see like how they have evolved. And Wall Street haven't updated their mental model. So when Matt Murphy, their CEO, got on the call and basically laid out 3 years roadmap, that is where my jaw actually dropped. So they are saying that they have 1.6 T PAM intercepts entered production in quarter four. Bookings for multiple tier one scalers are accelerating. You can see that anyways, like it's their data centers, hyperscalers are accelerating. They are the first one at 200 gigabytes per lane. Nobody else has this, and they are now shipping DCI modules to all of the major US hyperscalers. This means Google, Microsoft, Amazon, Meta, likely Oracle. These are like all of the five. Custom silicon, that is also the big thing. AVGO used to be a leader of custom silicon. If you want to make any custom ASIC chips, AVGO used to go for AVGO, but now they have also started in the business, and it kind of doubled in financial year 2025, and management expects 20% growth in financial year 2026 and 2027, and it doubles again in 2028. So we are talking about 1.5 billion to potentially 3.7 billion in custom silicon alone. So every one of those dollars represented in hyperscaler choosing Marvel over buying than any of NVIDIA GPUs. So on a stock that was trading at $76 before earnings, do the math on what multiple that deserves. They also closed an acquisition of one of the company, which was Celestial AI, for co-packaged optics and XCon, for, that is for scale up networking. Both already in joint discussions with customers. They aren't random tuck-ins. They are trying to fill up the gap, which is the AI interconnect, Slack, and the hyperscalers need to talk with each other and kind of have a robust connection. So, and then I have already covered about like how AVGO is the custom ASIC player and how that thesis comes in. NVIDIA is the king of GPUs, how that kind of comes in. And then there are like coherent, limited term, AAOI. So these are like photonics plays. ANET switching revenue, because just imagine that ANET is also a big player in Marvel. They are trying to work together, and ANET also sits kind of next to this trade. But again, then HBM, which is Micron, SK Hynix, and then there are like different other players, right? So that everything is good regarding Marvel, but again, the war problem kind of comes in. We are in the active military conflict, and then that's how I've expected. When I showed my video, I think the last video I started was how the crude oil was, and day by day it's been increasing, and that's the target over here. The initial target that I said in my previous videos was like 110. So the moment it does that, what's going to happen? So here it is, the US actually launched major combat operations, started February 28th, right? And the Dow actually kind of dropped and the VIX kind of increased. That's how you see that this is why the options are so expensive. But because 20% of the oil supply they actually comes from Strait of Hormuz. So inflation, that's the major thing. If inflation is there, then again it reignites the Fed to cut rates, even though like Donald Trump has his own choice of Fed, so he might cut rates, but the complications and the math is hard, and there are multiple compressions bad regarding how long the fundamentals are and good is. So yes, Marvel is fabulous. They rely on like Taiwan Semiconductors and outsourced assembly and packaging in Asia. A long prolonged conflict kind of destabilizes their shipping routes, and because if that kind of destabilizes, they won't be able to make any chips as well. And then there is a lot of US chip export tensions, which did to these names, so these are expected to fall. So imagine the trade war is there, oil is pumping up, that is there. So there is a lot of risk in Marvel. They already have been at multiple P multipliers. So days inventory outstanding came in for them for like 118 days. That's 12 days above the 5-year average. Okay, just it could be that they are pre-building ahead of their 1.6 T ramp, that the chip that they are making, or it could also mean they are getting ahead of demand in an environment where macro is deteriorating. So I want to see the number come down a quarter bit before I am becoming like more attached to this particular stock. So yeah, a fundamental is really nice, but watch this sector rotation which is happening. As I cannot stress much, the macro environment is hostile right now. You can see that who are the war winners and war losers till now, and macro plays these kind of things. So yes, of course, Marvel was one of the most underplayed stocks. Other than, if you see like compared to any of them, the other stocks, it's lucrative at the correct. But watch out for the sector rotation. Capital is flooding into defense, and energy is running wild when gold is also above 540, 5,400. So the money is coming from somewhere that is not a part of tech, or sorry, that is a part of tech. So yeah, so AI capex definitely is not slowing down, but what has make everything else slow down around it. So definitely keep an eye on this one. Marvel is a very exciting venture, but wait till the war calms down. Thank you.